Now it's recording. Hi, everyone. Okay, so I actually found two very interesting articles. The first one is actually about MSCI ESG. So now Bloomberg announced just today that MSCI ESG ratings will be available via the Bloomberg terminal. So like Bloomberg terminal users can access this data and use it alongside Bloomberg's broader functionality across the terminal, complementing their other ESG data sets like ISS. And as a reminder, MSCI ESG rating basically allows investors like us to measure a company's resilience to long-term financially relevant ESG risks. Usually they use like some kind of a rules-based methodology to identify industry leaders and laggards. And MSCI rates companies on a AAA to CCC scale according to their exposure to ESG risks and how well they manage those risks relative to their peers. And we, like as BSIG, we have been like using this data on MSCI ESG platform, but now you can also access it on Bloomberg, which is very nice. You don't need like a separate account for that. So definitely feel free to check it out. And maybe, yeah, if you do have like any other questions about that, feel free to shoot us an email or contact us. And another news article that I found was about Norway. Basically, Norway's new oil fund chief wants to seek more ESG-driven divestments. So basically, this fund is like the world's largest sovereign wealth fund with about $1 trillion under of assets under management. And basically, this new chief, his goal is to actually sell out of companies that perform badly on ESG issues to boost the fund's return. Already, like in 2019, so like last year, they sought about 42 different companies for using and producing coal, for breaching expectations on human rights, anti-corruption, or any other ESG factors. And as part of this new strategy, he also hired new leadership group, which actually consists of 3 women on board. Again, this just like highlights how companies around the world, especially in Europe, where like ESG is a little bit way ahead of US. Basically, companies just like recognize the benefits of integrating ESG to their strategies. But yeah. And also I wanted to mention that if any of you members have like any other interesting articles that you come across them, feel free to drop them in Microsoft Teams, or you can also like share them with the members on any of our general body meetings. You can also post them on LinkedIn. So definitely like send those articles. And let's see, is Elias here? Yeah, he is. Oh, okay, so great. I will now turn it over to him and to the healthcare team. They're gonna be pitching their stock.
Is someone else sharing our slides?
Yeah, let me actually do that, share the screen.
All right, awesome. Good afternoon, everyone. We're going to go into a brief introduction. My name, we're not there yet. If we want to go to the next slide, of the sector and then of ourselves for this presentation.
Yes, so just to go over a little bit of the goals of the healthcare sector. So essentially, we're looking at open positions in companies that have well-established guidelines and are determined to move forward in a greener and more sustainable direction, while also providing financial value to its shareholders. We want to look mainly for companies that provide better and more affordable access to healthcare, have a well-established anti-corruption policies, and also are constantly innovating in order to better serve patients going into the future.
So to go into our next slide, in case you aren't familiar with us already, my name is Mara Thompson. I'm a senior studying finance and minoring in CIS, and I'm going to be going over the company overview and ESG overview.
And I'm Elias Guillermo Hayes. I'm currently a junior majoring in finance and minoring in computer information systems and data technologies, and I'll be going over mainly the valuation.
So first, for our investment thesis, Medtronic's constant push for innovation have made it more than capable of weathering COVID-19's disruption of the medical device industry. With the expected increase in demand for non-essential surgeries, physician visits, and constantly growing 65+ age demographic, Medtronic is very well positioned to take advantage of these tailwinds. So we are recommending to buy Medtronic PLC stock at 108.68, where it closed on Friday. And our price target is 120.35 with its current market cap of $146 billion. Some highlighted ESG factors that we were looking into was their improved employee engagement strategies. For example, they do internal hiring within the company. They spent $77.5 million on learning development resources this past year, and 95% of the workforce has a development plan logged into the talent management systems, and managers meet with employees at least 3 times each year to set goals and aspirations. Next, we looked into their comprehensive anti-corruption policies. So there's currently 217 full-time employees with expertise in anti-corruption enforcement. And a couple things they do are conduct on-site monitoring of distributors, support and monitor compliance, and assess corruption potential prior to renewing or entering contracts. So they're not only monitoring corruption within their system, but also throughout their supply chains with people they have contracts with. And lastly, we examined their focus on gender equality and diversity. So they've set goals to achieve gender equality and diversity within the company. They currently have around 27% of women in global management positions, and they want to increase that to 40%. They also want to increase their US management positions held by ethnically diverse talent to 20%. Next, we look at a few catalysts which will drive our valuation and the growth of the company, which is the current aging population of 65 plus years, an international growth potential, resumption of non-essential surgeries once we acclimate to the current COVID climate, and federal funding for Medicare and Medicaid. Some risks we considered were product recalls and litigations, which are popular within the medical device industry, which we'll dive into a little bit later, COVID-19, and the unknown political landscape with the upcoming election of how government funding and health programs will be under the next president. So now to go into an industry outlook. Current trends are high demands for devices used in the treatment of COVID. So a lot of medical device manufacturers have switched to manufacturing respirators and such, away from maybe their normal heart surgery devices, which are in less demand due to the industry declining as non-essential health services have been prohibited or limited worldwide. And then the value of imports is expected to fall as other countries must meet their own domestic demand for medical devices before selling to the US. But luckily for Medtronic, it is a US company. Some future growth that we see is technological advancements to meet demand with home medical devices, especially with the whole work from home mentality. Also, industry employment will continue to grow, expansion into lucrative developing countries, and the aging population with increased health issues requiring medical devices among the elderly. And lastly, the industry is still in its growth stage and has not yet matured. Some success factors for companies within this space are access to highly skilled workforce, access to the latest technology, establishment of export markets, economies of scale, and having contracts within key markets. And Medtronic checks off all of these boxes, being located primarily as a US company and also a large company benefiting them with securing contracts and economies of scale. So this is the cost structure of the industry. We just wanted to highlight this of what the medical device sector is different from the whole healthcare sector. So the big greenish bar you see is the input costs that make up most of the revenues. So input purchases account for 37.2% of the industry revenue in 2020. So mainly what is the cost of these products is the physical things that are going into, such as the metal and the hardware. And then all the way to the right, that pink bar is other costs. And what we mainly see here, especially for device companies, are R&D expenses, which make up 12% of industry revenue. Given the competitive nature and strong dependence on product innovation of this industry, R&D is vital to keep up with technological advances in the healthcare field, and we'll discuss how Medtronic does so in further slides. And then lastly, for the overall industry, these are some ESG material factors that we're going to look over that apply to the entire industry, and later we'll deep dive into how they apply to Medtronic specifically. And the graphic on the right is pulled right from Medtronic's CSR report on how they add value to society, support a global workforce, and promote environmental stewardship. So now with a better understanding of the overall industry, we're going to explain a little bit more about how the company functions. Business overview: Medtronic PLC is traded on the New York Stock Exchange as MDT. It was founded in 1949 by Earl Bakken and Palmer Hummendial. It is an American company headquartered in Dublin, Ireland, and a global leader in medical technology services and solutions. It currently operates in over 150 countries, serves over 75 million patients, and has over 90,000 employees. This past year, they had $2.4 billion in R&D with over 47,800 patents. Currently, the stock is trading at around 108.68. Looking at the graph, you can see it trades pretty closely with the S&P 500, but in some instances has outperformed it this past year with a 52-week range of 72.13 to 122.15. The CEO is Jeffrey S. Martha. He has his bachelor's degree from Penn State University, and he's an active champion for advancement of women and diverse representation at Medtronic, which we saw earlier in their ESG goals to advance women and minorities in the workplace. And some other ESG efforts that they're currently focusing on are looking to reduce GHG emissions through routine monitoring and leading industry in meaningful innovation in value-based healthcare, which is a primary focus of our sector within BSIG. We're really looking at those innovative companies to improve healthcare for all. So next, just to go into some risks that the company is facing and how they're mitigating it. So they do have some product quality and safety issues, which is similar at the industry as a whole, but they do outperform their peers in mitigating those, and we'll examine those when we look into their scoring in a few minutes. They also have cybersecurity issues, a history of lawsuits regarding product safety issues, and human capital management risks. How they mitigate these is constant investment in R&D and testing for the product quality and safety risks, and improved employee engagement management strategies for the human capital management. The company also has a comprehensive anti-corruption policy along with whistleblower protection and has implemented internal systems. They also have been utilizing an M&A strategy and have recently acquired Neutrina Health, which presents an opportunity to gain competitive advantage within the medical tech industry, given current trends and using insight from big data and AI. So Neutrina Health really focuses on what food you're putting into your body and how the nutrition affects your health, which Medtronic wanted to use to add to their diabetes portfolio and add it to an assistance to the diabetes devices that they manufacture. Some other ESG influence that they have had is they have a current pipeline of 55 clinical studies started and 279 clinical studies that are ongoing at the end of 4-year-19, which increase accessibility and affordability of healthcare. And also for year 19, the U.S. Patent and Trademark Office named the hemodialysis system currently under development by Medtronic as one of the 2018's Patents for Humanity Award winners. The program honors innovators who create game-changing technology to meet global humanitarian challenges. So to dive more on how the company integrates ESG into their operations, the material factors, as I mentioned before, that we'll be exploring are access to care. So Medtronic works with health systems around the world, shares technologies, services, resources, and expertise to remove barriers to affordable treatment of chronic diseases. We also see that as a growth factor of the company as they go into more developing countries. In regards to product quality and safety, they do have more issues with this because they are a larger company. So they, numbers-wise, will have more deaths or injuries associated with their products. But due to their size, the volume and intensity of these product quality and safety issues are actually lower than their peers. Their peers are just smaller in size. And they're mitigating that with the continuous investment into R&D. For business ethics, Medtronic has a comprehensive anti-corruption policy that I mentioned earlier, as well as whistleblower protection. This entails employee training, supplier due diligence, and internal monitoring. And then for cybersecurity, it's still an upcoming trend, and companies are learning how to deal with this risk. But they're trying to improve processes, reducing data security and privacy risk by improving processes and improving threat detection within the system. For employee engagement, they improved their employee engagement management strategies through competitive benefits, leadership training, and a focus on diversity and inclusion. And for product stewardship, they aspire to minimize the lifecycle footprint of their products and packaging through innovation and design. And lastly, for supply chain responsibility, compared to their for year 13 baseline and for year 2019, they consumed 26% less energy and generated 38% fewer GHG emissions per $1 million of revenue. They're also consistently implementing new conservation products and generating more renewable sources of energy. They're also switching to LED lights, which is helping with that. And their 2020 environmental performance goals are to reduce GHG emissions and non-regulated waste by 15% and reduce water use and regulated waste by 10%. For third-party data, their Bloomberg disclosure score is 38.84 with a BBB rating in MSCI and a Sustainalytics rating of 24.8. For specific areas within the MSCI report, they outrank their peers in human capital development, corruption and instability, and toxic emission and waste. For mapping through to the SDGs, they map to good health and well-being, gender equality, decent work and economic growth, industry, innovation and infrastructure, and responsible consumption and production, and partnerships for the goals. And specifically our sector, when we picked out our themes, we mainly wanted to map to SDGs 3 and 9, and this company covers both of those. So for the next slide, this just further shows how Medtronic compares to their peers. So they are pretty equal, if not outperforming their peers in almost all areas except for corporate governance. But something that I wanted to highlight was the rating and trend. So they're BBB, but they've increased. So that means that in the past they were a B and then a BB and now a BBB. And we see with their initiatives that they'll likely continue to improve and hopefully make it into that A range. And here's the same information just from Sustainalytics. So Medtronic, compared to their peers, they are the highest industry rank out of their peers for this data provider, and they have medium risk compared to the high risk of their peers.
Yes, how are you guys? So now I'll be going over the evaluation. So essentially right now you can see the sales data. As you can see, it says that there's a 13.2% decrease, and that's mainly due to overall revenue decrease due to restrictions on non-essential procedures and the subsequent decrease of demand for devices for said surgeries. There's been an increase in demand for essential COVID-19 treatment equipment, so that's mainly relating to ventilators and respirators for said procedures. So now to dive into Medtronic's and comparable companies analysis, you can see that Medtronic's multiples indicate that the stock is currently cheaper than its counterparts in the industry, and also given its size, it makes it that more attractive for investors looking to get into the medical device industry. So to dive deeper into the key assumptions that essentially drove our model, we can see it to the left, we actually have how we calculate our WACC, and that's essentially by adding all the sources of financing. As you can see, I actually broke down the total debt, so short-term debt and long-term debt, and then added basically the equity funding, so the market cap. They currently don't have preferred shares, so we didn't take that into account. And then essentially just multiplied each one of those, after getting the total enterprise value, we essentially got the weights of each type of funding that they're getting. And then essentially with their respective required rate of return, we took also the after-tax cost of debt, and then we essentially added those to get the weighted average cost of capital. Then to the right, as you can see are our key assumptions that drove the rest of our model. You have the tax rate, which is something that I wanted to highlight. Even though Medtronic has a very low tax rate, it has actually been even lower in the years coming to 2020. So we just thought that at least taking the tax rate from the previous 3 years, we think it's a little bit more representative, given that the average corporate tax rate is around 21%. And also our perpetual growth rate, I know that it can be considered as a little bit aggressive, given obviously everything that's happening with COVID. But given that we don't think that COVID will essentially stay into perpetuity, as we think that Medtronic will be, we think that a 2% growth rate, up until the end of our model, so above 2025, we think that it is a reasonable assumption to assume going into the future of the company. Now, this is essentially just a snapshot of our model. At first, we were using a sales growth that was around 8%, but we thought it was a little bit too aggressive. That was essentially what management were saying, that those were their estimates pre-COVID. And also as COVID started, no one really thought that COVID was going to last this long. So we essentially went ahead with what FactSet analysts were saying, and they were estimating around a 4.9% sales growth. And eventually that essentially growing up to 8% when it was around 2024, 2025. So that's essentially what we went with. So as you can see, after doing our DCF, we essentially got an equity value or a price target of 120 and 35 cents. And to the right, you can actually see that doing a relative valuation approach, we actually got a price target of 120 and 29 cents, which is still along the lines of what we initially calculated. Our rate of return, or essentially our target price upside, is expected to be around 11%, or 10.74 to be more specific, and we expect an IRR of 9.09%. Over here, you can essentially see just a bunch of different tables, which essentially account for different sensitivities, or essentially where we have on the y-axis, so essentially to the left of each table on the top, so the x-axis, you see different factors that we're taking into account. And these tables mainly allow us to see how sensitive our model is to fluctuations in these factors. We're actually going to we took more into account the middle table, which takes into account the factors of EBITDA, and WACC, since we think that for both the downside and the upside of where the stock could move is along the lines of what one could reasonably expect of the security. So this is just further supplementary data. This I essentially pulled it from Seeking Alpha, which is essentially just a forum where people where a lot of analysts can just state what they're thinking about the stock, and just all their Wall Street analysts, like what they're actually thinking. So as you can see, out of a 5, we see that most Wall Street analysts on average are thinking that they're bullish on the stock. And on the bottom, you can actually see a dividend summary. So this essentially, we thought it was interesting to include, since there have been studies done that when companies have a strong growth rate for dividends and their dividend has been growing for subsequent number of years, it's been strongly correlated with a positive growth in the securities. We just thought it was interesting to include as well to support our hypothesis. Over here, you can just see just a little credit analysis and just rating analysis. So as you can see, most of the company's debt is actually due further out than 2030, meaning that obviously they have a lot of time to either get the funding necessary to actually service that debt. And on the bottom, you can just see the S&P rating. So as you can see, it's an A-rated security with a stable outlook, meaning that they will have no problems and they will not be insolvent once the debt actually matures. So that obviously gives us a lot more confidence in terms of the financial position of the company. Here you can see just a snapshot of the analyst ratings. This is mainly taken from Bloomberg. As you can see, 28 analysts actually covered the stock, and out of those 28, 22 are recommended to buy, 5 are recommending to hold, and only 1 is recommending to sell the security. And from these analysts, their average estimate was around 118, which is very close to what was in line with our model. And if you here you can just see just a little bit more color into what the graph was actually showing. This is essentially just a table showcasing all of the different analysts and what they're saying. We actually don't have the actual analyst that said that it was a sell, but if you dive into FactSet, you can see with more detail who is saying that it's a buy, who would sell, who's telling it who's saying that it's a sell, and we can also see the price targets as well. So as stated before, we're essentially using our EBITDA and WACC variables of our sensitivity analysis. And from this, we were able to conclude that if our bear case were to happen, we would be expecting an 8.6% downside, which would see a Medtronic stock being valued at 99.29. If our base case, which is the main one that we actually tested, were to happen, we would see a 10.7% upside and Medtronic valued at 120 and 35 cents. And if our bull case were to happen, or if it will come to fruition, we would see an upside of around 39%. And we would see Medtronic valued at 159 and 2 cents. So based on our analysis and future growth shown by trends in the industry related to the increased spending in medical devices, the aging population, Medtronic's ESG commitments, and the impact of the novel coronavirus, we believe this to be the future value of the company. And just to conclude, the 10.7% upside with a potential of rising to 39% calculating by using our conservative DCF multiples and unlikely downside creates a strong financial value. Compared to the industry and its size, Medtronic trades favorably compared to big name competitors and the market. And regarding ESG, Medtronic acts responsibly by working towards offering equal opportunity to increase diversity within the company as well as the community in which the employees live in. With the improvement of global health and the market adapting to living conditions with COVID, non-essential surgeries will start to see increasing demand, and Medtronic's continuous investment in R&D mitigates the risk of product quality and safety. And that's why we believe that Medtronic will be an excellent addition to the portfolio. Thank you.
Great, thanks guys. Does anyone have any questions? Okay. Well, if there's no questions, then we will send out the survey link. And Sasha, if you want to throw it in the chat, and then Sasha will also put it in the Teams as last week. And then as a reminder, you have until Sunday to complete it. Oh, I do also want to announce that last year's pitch, Brookfield Renewable did pass, with a very strong majority yes vote. But it is very important, and like we do highly recommend, again, like if you have any questions, to reach out to them or to look through the PowerPoints, which are also in the Teams folder under the healthcare channel, to actually sift through, look in detail, check everything over, and ask more detailed questions if you do have any. But if there's nothing else, that is really all we had for you today. And next week, we have Tech Pitching, who was supposed to pitch today, but they ended up changing their company, so they'll be pitching NVIDIA, and I don't even know who else is pitching next week. Is it consumers? Yeah, I think so. So you can look forward to that. But again, there'll be a schedule posted and the companies that they're posting as well. So awesome. All right. Well, thanks everyone. Have a good day. Good job, Mari and Elias.